Welcome back. I'm Luke Lloyd, filling in for Scott. There's something unsettling about days when nothing feels safe. Gold slips, silver gets hit, even treasuries. The old mattress money of Wall Street can't seem to catch a bid. It's like investors walked into the storm shelter and realized the lights were flickering in there too. Stagflation fears will do that. Slower growth on one hand, sticky inflation on the other. It's the economic version of driving with one foot on the gas and one on the brake. Nobody's quite sure which way the car lurches, and then you layer in war headlines. Historically, markets react first and think later. There's a shock, a sell-off, a scramble for safety. But here's the part that's easy to forget. The market has never failed to recover from a war. Not once. The path isn't smooth. It never is. But over time, economies adapt, capital reallocates, innovation accelerates, and markets eventually move forward. So if traditional safe havens are wobbling and volatility is hanging around, are we looking at deeper trouble or just another painful reset before the next leg higher? Let's bring in Keith Fitz-Gerald to break it all down. Keith, welcome to the show.
Thanks for having me back. It's great to be here as always.
So as promised, a few segments ago, I did say when we're talking about gold that we're going to talk about gold very quickly towards the later half of the show. And it's very interesting today. Gold is down when it seems, maybe not surprising now that the market's recovered a lot, but at least at the open, when the market was deep red, it kind of felt like a risk-off kind of day. Why was gold down?
Well, this catches a lot of people by surprise, and it speaks to something I've been yammering about for years, like a lone wolf in the wilderness. This is not about gold. It's not about having a store of safety anymore. Gold is a rehypothecated asset that is now the subject of derivatives, futures, fast contracts, CDSs, all sorts of things, which means it's been rehypothecated 8, 9, 10 times. So it's all about whether the institutions are on side or off side. And what you're seeing is highly technical moves. The institutions have said, hey, enough. We're out, and they're simply pulling back. So the tide's going out.
Well, we were talking just before the show that volatility is something you just have to deal with because volatility is an opportunity, right? And I've been watching you for years, and you've been saying things along those lines for a while. There's a lot of volatility in technology, but you also, when we're talking, said it's maybe a generational buying opportunity. Tell me about that.
You bet. Volatility is something people instinctively fear, Luke, but, as you've heard me say for years, is that, it's also a traveling companion. It's something you want to look into. The markets are the only, let's put it this way, the markets are the only store on earth where people fear a sale. So if you can identify great companies at inopportune moments like the present, I think you have an opportunity. Tech stocks in particular, they have been absolutely pasted, shellacked, whatever term you want to use, yet they're growing at double and triple digits. AI is accelerating. Digital expenditures are accelerating. Hundreds of billions, trillions of dollars yet to be put into the marketplace, all of which is looking for a home. So I submit it's a generational buying opportunity.
Let's ask the simple question. Is war good for the stock market?
No, it's not. And as a military family, it's something we take very seriously. All of our kids are in the military serving, actually. So no, it's never good for the stock market because of the angst that comes with it. But here's the thing from a functional standpoint. War creates panic. Panic creates a dip. The dip is what actually creates the opportunity, which brings to mind another saying you've heard me use for years. People think you make your money in bull markets, but you don't. You make your money when the bears come out to play, and they're certainly out in force right now. So again, buying opportunity.
Well, thanks for your whole family for your service. We deeply appreciate that. And I met your son. He's a great guy. Looking forward to meeting him again very soon. Maybe down in Florida when we're down there at the Money Show, I believe.
Yep.
When we were talking about the markets and software, one of the interesting stats I'll also bring up again, I brought up in another segment before this, is the IGV, which tracks software, is, I believe, 10% below where it was in 2021. But a lot of these companies are making way more money. They're growing at faster rates. And now you have AI, a brand new technology that's disruptive and revolutionary, that's being implemented, helping a lot of these names and productivity in the system. So it's very interesting, is it not, that software is below 2021 levels in a lot of ways, in a lot of areas?
It's not only below 2021 levels, it's trading at forward price multiples that are consistent or lower than consumer staples, which tells you how far afield people have gone. They've let their fears get the better of them at a time when they shouldn't. We're on the cusp of what we refer to as the sixth wave, Luke. It is the greatest single transformation in recorded human history. You had steam, you had distributed locomotion, you had the age of navigation, you had the internet, digital things, all themselves. Now you're talking about technology that is changing the course of humanity. We've never seen anything like this. It's trillions of dollars of opportunity. So companies like Apple that you can't live without, for example, Microsoft, nvda in particular. If you think of the gold rush in 1849, people that made the money weren't the people in the hills looking for the gold. It was the people selling the shovels, the diapers, the bullets, and the medicine. They made bank.
Well, what's going on in the Middle East right now? One of the people selling the picks and shovels is Palantir. So you almost have the best of both worlds when it comes to Palantir, because you have a software AI name, but you also have almost a defense name internally as well. So I know that's been a stock you've been right on for a very long time. Is there any other areas you're paying attention to? I mean, we bought stock, I think Cellubrite it's called, CLBT. It's sells defense software also to governments. So is there any other areas you're looking at?
Well, I like to stick with winning horses when I'm in the middle of the race. So my hope is that I continue to be correct on Palantir. I continue to buy shares and I continue to hold them for a very long time. That keeps our warfighters safe. It helps them prosecute the mission more effectively. I think that that's, clearly a concern. Google, which I don't own, is, receiving all kinds of headlines right now. I'm not sure what to make of that, but it's a logical thing to take a hard look at. So those are names that I'm really, really keen on looking at, examining closely, especially as they've gotten sold off.
About 15 seconds here. Do you have any new buys that you've bought the past few weeks that you want to talk about?
No, it's all the same great names. Again, I pick my names very carefully. I ride them through thick and thin as long as the story remains consistent, and it has.
And that's what's worked very well for you for a lot of years. Keith, thanks for coming on today. Always fun. A lot of great insight.
Thanks, Luke.